Well, we've made it. This is the grand finale of the ICT core content series. Intraday top-down analysis. This is it. This is the one that pulls together an entire year of learning into one single, cohesive trading model. Welcome to AI Explains ICT. We're breaking down the final episode of the core content, which is month 12, episode 4. Seriously, if there was ever a time to grab your notebook and really focus, it's right now. This is where all the puzzle pieces finally snap into place. All right, so here's our game plan for today. We're going to start high level with the 4-hour analysis framework. Then we'll zoom in on the specific tools of the trade, the ranges, deviations, and all that good stuff. After that, we hit the main event, the 2 core trade setups ICT uses, breaking down the bullish and bearish patterns. We'll even walk through a case study to see it in action, and then wrap up with what might be the most crucial part of all, your own discipline as a trader. Okay, first things first, let's talk about the foundation. This isn't just some abstract theory. According to ICT, this is his personal systematic checklist. It's the starting point for every single analysis, and it all anchors back to the 4-hour chart. Now, take a look at this. This flowchart is basically the entire roadmap for a top-down analysis. You can see it starts with big picture stuff, like the day of the week. Then it narrows down into specific session ranges, like the CBDR and the Asian range. And it all funnels down into projecting the day's move. This is the exact sequence, the step-by-step process, and we're about to break down its most important parts. So how do we actually use that framework we just saw? Well, you need the right tools for the job. This section is all about building your analytical toolkit, the exact instruments ICT uses to measure price and project where it's likely headed next. Okay, here are the 3 big ones you need to know. First up is the CBDR, or the central bank dealer's range. Think of this as your baseline for the day. You use its standard deviations to project the potential high and low. Next is the Asian range. This is a classic consolidation period, and the rule of thumb is you're looking for buying opportunities below its low and selling opportunities above its high. And finally, you've got the flout, which is just a combination of the first 2. You take its half range, and that becomes one standard deviation unit for even more precise projections. The real magic happens when you blend these tools together to find levels that line up. And now, we get to the absolute heart of the matter. Once you've done your high-level analysis and you have your tools ready, it all boils down to finding just 2, and only 2, core trade setups.
This right here. This is the entire logic in one simple graphic. It's a 3-step funnel. First, you establish the condition. That's just your higher time frame bias. Is the market bullish or bearish? Simple. Second, you identify the stage. This is where you spot the specific price pattern, the setup itself, that lines up with your bias. And only when those 2 things are checked off do you move to the final step, execute. It's clear, it's logical, and it keeps you out of trouble.
And just to hammer home how critical focus is, ICT says this himself. After teaching a universe of concepts, his actual day-to-day trading comes down to mastering just 2 patterns. This isn't about knowing everything. It's about being an expert in the few things that really work.
So what are these 2 magical patterns based on? It all comes down to these 2 ideas. You're either trading for internal range liquidity, which means you're entering inside an existing price swing, like with an optimal trade entry, or you're going after external range liquidity, which is all about trading a breakout or a stop run, the classic turtle soup pattern. Every single setup we're about to look at fits into one of these 2 buckets. That's it.
Okay, let's get visual. It's time to look at the patterns themselves. This is the stage part of our process, broken down into your go-to execution models for both buys and sells. The very first bullish pattern is that classic internal range liquidity play. This is the bread and butter, what ICT calls the optimal trade entry. So here's how this beautiful setup unfolds. You get a strong move up that leaves a fair value gap behind. Then, price makes a little short-term low. Now here's the key. You wait for price to dip back down, run the sell stops that are sitting right below that short-term low, and tap into that fair value gap. That rate on liquidity into a discount level, that's your trigger to go long. All right, next up, we have the external liquidity pattern, the turtle soup, and just as important, its backup plan, the bullish breaker. On the left, you see the turtle soup. This is when price makes a very deliberate move below a major old low, grabbing all those sell stops. And it does this right into a higher time frame discount level. That's your entry. But what happens if you miss it or you're just not sure? No problem. That's where the pattern on the right comes in. After that stop run, price rallies hard and breaks a recent short-term high. That old high now becomes a bullish breaker. It's your second chance to get in on a pullback. Now what about the sell side? Well, this is the easy part. The logic is just a mirror opposite. We're going to see the exact same patterns, but we're just flipping them upside down. We're looking for premium prices instead of discounts. So on the left, you've got your bearish optimal trade entry. Price drops, leaves a fair value gap, and then rallies just enough to poke above a short-term high and into that gap. That's your sell signal. And on the right, the bearish turtle soup. This is where price runs a big, obvious old high, triggering all the buy stops right into a higher time frame premium level. That's where you look to get short. See? It's the same internal versus external idea, just in reverse. And you guessed it, just like on the buy side, there's a contingency plan for shorts. If you miss that perfect turtle soup entry at the high, you just wait. Once price breaks down and takes out a recent short-term low, that broken low now becomes a bearish breaker. A little rally back up to that level gives you a perfect second chance to get short or even add to your winning position. Theory is one thing, but seeing this stuff play out on a real chart is where it all starts to click. So let's walk through a real-world example in the gold market that ICT used to show exactly how this framework all comes together. Okay, so check this out. This is the top-down process in action. Over on the left, the 4-hour chart sets the condition. The bias was clearly bullish, but price needed to trade down into a discount first. Then, flipping over to the 1-hour chart on the right, that's where the stage was set. ICT identified a fair value gap and an old high as a key discount zone, and he anticipated the price would run the sell stops into that area before reversing. And that is exactly what happened. So, we've covered the framework, we've covered the tools, and we've covered the patterns. But ICT is crystal clear that absolutely none of this works without the final and most important ingredient, your own personal discipline. And, speaking of discipline, congratulations, seriously. If you've watched every video in this core content playlist, if you've been taking notes, then you have already demonstrated the kind of patience and discipline that a real trader has. And according to ICT, that commitment is the true foundation for all your future success. All right, so let's boil this entire year of content down to a few key rules. Number 1, anchor your entire analysis on the 4-hour chart. Number 2, absolutely master those core tools, the CPDR, Asian range, and float. 3, focus like a laser on the 2 primary patterns, internal versus external liquidity. 4, always have a contingency plan with your breakers. And finally, the most important one, take all of this and build your own personal model, and then trade it with unshakable discipline. Thank you so much for joining us for this final journey through the ICT core content. If this video helped you put it all together, do us a favor and hit that like button and subscribe to the channel. And hey, if you have any questions at all or suggestions for what we should cover next, please drop them in the comments below. A real human will get back to you. Safe trading, everyone!